You are listening to chartingwealth.com for Monday, the 25th of July, 2016. We just finished recording the weekly review and forecast. Please make sure to listen to that so you know what the weekly trends are as you listen to our forecasts throughout the week. Now, let's talk about what's been going on. Again, we're going to cover, to begin with, our three indexes. Those are big baskets of stocks. The first is IYY, that's the total market. The next is SPY, that is the S&P 500. And the third is the Qs, QQQ, which is the NASDAQ 100. And then, of course, we'll follow everything up in the end with what's going on gold. Now, our charts are loading a little slow for us. We are traveling, so bear with us. We should be able to see all of this in real time without a problem. What do we see going on? Well, the market ended up on Friday up 0.42%. We will have to redraw our trend line. It actually has broken that. Now, when we look intraday, maybe we don't have a break in the trend line. We will check that out. Actually, nope, we're still above. Sometimes it's hard to tell on the 2-day chart if the market actually ended up through it, but no, we ended up above, so we can keep the trend line where it is right now. But we did see a bit of a loss of energy in the market. The derivative oscillator continued to gain energy. The MACD and the signal line aren't quite as far apart as they were previously, but they're both continuing to move up. Again, if you've already listened to our weekly review, you know that we are in a strong up move for the last 3 weeks on the weekly chart. So again, all things being equal, the market always tends to move in the direction of the biggest wave, and that, of course, is the weekly chart for our purposes. Derivative oscillators continuing to build energy. Now, let's look at what's been going on intraday on our 4-hour chart on the total market. 4-hour chart shows us that we are still tending to trend down on that. We crossed over going down back on the 19th, and even though the market was up some on the 20th, then down on the 21st, up again on the 22nd, it is still, however, trending down. We have not had a crossover going up. Our pullback is not yet over, so we do not have technically an entry point. Some of you have been using, as far as entry points go, as far as pullbacks, you've been using the Heiken Ashi candlesticks, and so far they have been working nicely. If you waited for a pullback around the 19th and then jumped in as the market started moving up on the 20th, that would have worked for you. Again, the pullback on the 22nd, and you jumped in the morning on the 21st, you jumped in on the 22nd. That has worked all right for you at this point. But again, technically, we like to see our MACD and signal line crossover going up. That signifies the pullback's over. If indeed that does occur, then you can much more safely get into a continued uptrend. The opposite is true for downtrends. That's what we try to do. You want to know more about that? I do refer you to the first chapter of our book. We have recorded that first chapter and put it up on the channel. You can find it at YouTube. You can find it on Facebook, Facebook, Twitter. And of course, you can find it at our website, chartingwealth.com. So it will explain a little more about our tactics and principles. That is where we are on the total market. Now we're going to go back to our 2-day chart. We're going to take a look at the S&P 500. Of course, it typically tracks very similar to what's going on IYY. And it is loading up extremely slowly. Let's see if it's going. There we go. We've got it to load up again. It is off a little bit as far as that up movement goes. We do see the derivative oscillator continue to move up, still positive on the MACD. If we look for the intraday movement to see if that down move has played itself out, it has not. It looks very similar to the total market, still in a confirmed backup. We have not had a reversal yet, so no good entry point. Those of you who have been using, again, the Heiken Ashi candlesticks to find pullbacks with red down candles and then the reversals in green, that has not done too bad for you, has it? Okay, again, not the safest way to do it, but you're just experimenting, right? You're not using real money. You're using your virtual trading accounts and you're learning how these markets work. And remember, we are in the summer doldrums. Market tends to slide sideways, not a lot of volume. You can have herky-jerky movements that don't make a lot of sense because, think about a bathtub that's about a quarter full of water. You can really, really splash that water around. You don't have a lot of volume. Okay, now we're going to go back to our 2-day chart and we're going to take a look at the Qs. For the record, the S&P 500 up 4.45% for the day. The Qs up 0.42%. The Qs just continues to look just such a nice, clean, up moving chart. It has been all green up candles since July the 1st. And again, we've got a nice trend line. Unlike the trend line that showed some slacking off of the movement, our trend line on the Qs is beautiful. So again, continued up movement on the Qs on the 2-day chart. See what we see on the 4-hour chart on the Qs. As it hopefully loads up, there we go. It is still also like the other 2 charts. It is still below. It has not yet crossed over the signal line going up, although the derivative oscillator is in the positive and has never actually gone into the negative over the last many days. Got really close on the afternoon of the 19th, still above the 2-day trend line. And again, those of you using the Heiken Ashi candlesticks to give you entry points, that has worked out quite well for you. And we love to hear what your results are always on that. Please tell us the tricks you are learning as you are out there trying to make these trades work on your virtual trading. So lastly, that is where we wrapped up. And again, remember, all 3 of these indexes are in positive up moves. We are going to go to gold. Lastly, gold was down for the day, 0.75%. Since we had the crossover, actually starting on the 22nd, that 2-day candle, we have now drawn a signal, our trend line. And of course, we are now officially trending down in gold. It was down 0.75% for the day. If we look on our 4-hour chart, what do we actually see with gold? We see that gold did pop up some on the 21st and then down again on the 22nd. It has been in a confirmed down move since the 11th, so we don't have a pullback on gold yet for an entry point. And again, we just had a confirmation in gold rolling over as far as our 2-day chart goes. So that is where we are, my friends, as we get ready to jump into the market on Monday, the 25th of July. Again, I urge you, listen to that weekly review and forecast. Also, listen to that first chapter of Charting Wealth, how to empower yourself. I'm trying to remember the subtitle. Empower yourself by learning to read stock charts. That is what the book is all about, and we'd love your feedback on it. If you appreciate what we do, best thing you can do for us, go to iTunes, subscribe, give us a 5-star rating. Also, YouTube. Subscribe to our channel. We're getting closer and closer to 100 hardcore subscribers. When we do, we can start feeding you proprietary broadcasts, and we can't wait to do that. Help us out in both those areas. We appreciate you. Always write us at chartingwealth.com. Sign up for the newsletter there. We don't charge you for any of the things that we do. We are here about empowering you to read these charts. That is the real key to empowering yourself to riches in the market once you get this down, and you can do it. Thank you so much. We appreciate it. Let us hear from you. God bless from chartingwealth.com.